Natural gas prices moved lower on Wednesday despite forecasts calling for a polar vortex or sub-freezing air descending from Canada and covering most of the continental United States in late January. Both the American and European weather models are calling for a heavy dose of cold by late last week, but the pattern is not expected to be as strong as 2014 polar vortex. This may be dampening demand expectations. U.S. exports of liquefied natural gas set a new record in December after a record-breaking November 2020, averaging 9.8 billion cubic feet per day. In December, U.S. LNG exports were more than 3 times higher than the reduced export levels in the summer of 2020. Asia and Europe are expected to experience freezing conditions that should drive up heating fuel needs. March natural gas futures are going to have a hard time rallying over the short run if the expected cold isn't powerful enough to drive prices over the top of a key resistance zone at $2.90. To the downside, technically, minor support is $2.69, but the main support is around $2.50. Fundamentally, strong LNG demand could prevent a washout to the downside. With gains capped by a weak polar vortex and strong LNG demand expected to underpin prices, we could be looking at a range-bound trade over the near term with support coming in at $2.55 and resistance $2.80.